Hello, this is Compound Interest Stock Guide. Today in this video we're going to be talking about crude oil. I believe it's the lifeblood of the military complex, and when crude goes up, the market goes up for the most part, not 100% of the time. I'm also going to share with you the 10-year bond yield, how it is acting, and I will explain to you the S&P 500 futures, how it was tonight. So stay tuned. This is just pre-market information for my viewers and subscribers, so I appreciate if you hit that thumbs up. Put a lot of effort into this video, so please hit that thumbs up. Let's get to 20 thumbs up. Then we can boom up. We can get 30 likes, then we can get 40 likes, and just grow the channel. Just having the best people, smartest people, so we can just make lots of money in the future. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and you like the investments you're pursuing. Alright, so I've been up a lot. I haven't been sleeping. A lot on the go. So I'm just going to digest all this information to you guys that I've piled on for the last few days. But I just got back into Vancouver. My parents were having a memorial service for my brother on Saturday, so I'm just here. But I will share this. So I don't have my microphone with me, but I think the volume should be good on the mic with the computer. So just let me know about that. Anyways, so crude's been hitting around $33. It was yesterday, and now it's coming back down, and it went down to 30.69, and then it went up, popped to like 32ish or 31, and then it popped down. Now it's just trading around like 30.92, so it's very unstable. I wouldn't really like to see it go below 30. If you could see it go from like 29.80 all the way down to like 27, playing in the markets on the SPY. The broader market is going to affect pretty much every stock unless the news is just such a big catalyst that it kind of outweighs the negative broader market sentiment. So yeah, like coronaviruses, those stocks can do very well today, potentially. If crude stays below these levels and it keeps going down, I do think that they can do very well. I also think there's potential for gold, but they kind of want to suppress gold, so I'm not going to say it's a green light or anything like that. Then I'm going to say that, puts on companies, if things start going down a lot. I'm looking at Apple puts. I'm looking at Boeing puts. The ticker for Boeing is BA. The ticker for Apple is AAPL. I'm looking at Microsoft, MSFT. I'm looking at the SPY, the ETF for the S&P 500, SPY. I'm looking across the board. High PE ratio companies that can get crushed in this bear environment. So I can't overstate that. We are in a very big bearish territory, and there's a lot of negative things going on. They're going to try to keep it up, but there's a lot of negativity, so it's going to be a battle out there, and I'm biased towards the bear side. If you have stocks that you're up on the cash, I would very much recommend you selling out a lot of your position, maybe 20 to 50%. It's what you want to do. Look, I can't tell you what to do, buy or sell. This is just an idea, because if the stocks do start cratering down like 20 to 50% more down, you're going to have a bigger cash position for if you want to buy later on when things get better. But there's just so much negativity. I mean, we don't know how this will unravel as far as the NBA, and now you got Tom Hanks. So look, I think it's not a negative. Like I listened to Tom Hanks' son, and it didn't sound any severity towards this virus or anything like that. It's basically, in my opinion, is the mainstream media is blowing it up and hyping it up, and they're going to use it as like a scapegoat for the fact that the market's like overinflated. So that's just my feelings on things. Look, you can disagree, but I've done my research. So that's what's up with crude oil. Now we're gonna look at the 10-year bond. So, you know, look back to, this was about, you know, back in March. It was February actually. No, March. Yeah, it was back in March. Like February, we're back at like 1.5, and then just cratered, and then went down to 0.318. Wow, just dipped so hard that night with the deal with the crude oil getting just crushed. There's kind of some types of oil wars going on with Saudi Arabia and Russia. I'm hearing that basically with Russia, that they're getting tax incentives to push more oil on the market. So there's incentives in the Russian government to sell more oil. It doesn't matter the price. So they're kind of taking advantage of that. So yeah, that's what's up. And you know, it's kind of bottoming here, but you know, that's just still a red candle. You know, red candle can go to red candle and keep going down. Now if it turned to a doji, I'd feel better with this whole situation going down. A doji turned to a green candle, I'd like to see the bonds go up. That's my opinion. Now let's look at the S&P 500 futures, 2614. The high was, I think, like 330 or something, you know? So, you know, it's really gotten crushed. We're in very big bear territory. I'm looking at Apple puts. Like I said, you know, my idea is basically, you know, it's probably going to open up around 270, 267 Apple. So my thinking is it could potentially go to like 275 on a pump. And then it'll, like, in a bear market, you don't hold the pumps. You sell the pumps because they get sold off quick, right? There's no strength. There's not strength in a bear market for the long side. There's strength on the downside, on the put side or the short side. That's the reality of things. So yeah, you just got to be cognizant of the direction, and don't be afraid to get out of your positions if things aren't like working exactly the way you want to. If you're day trading, even if you're swing trading, you know, you just be cognizant of your cash position. You know, it doesn't hurt if you had, like, say you had $50,000 or more in your whole portfolio to sell off 2,000, 3,000, 4,000 at even these, like, some losses, you know, whatever the case, and just get into a bigger cash position, because things can get burnt a lot further downwards. So what they're really doing is you're hedging the downside risk when you do things like that. When you have all your cash in the long side, then you're really risking all that when it's just sitting overnight and all this negative news comes about. So again, I can't tell you what to do, but these are just ideas, and from my understanding of how the market is playing out, these are just little ideas / recommendations that you may want to pursue to have a bigger cash position. Look, I don't know what your portfolio is. I'm just telling you what's up, and it's going to be very crazy. For all we know, we could see SPY 220, we could see 200. There's a lot of negative downside risk. So my ideas today are to hedge the downside risk on a pump to get like a 1 to 3 month put out from, say, like Apple, potentially like end of April, early May, mid-May. Say for Apple, something like a 220 or a 230 put, but you know, Apple does have a lot of cash, so they're not really the biggest candidate for getting destroyed in this market, but they could have some negative news for sure, such as like maybe they just shut down the facility because one worker got the coronavirus or anything like that. So there's definitely risk with Apple, no doubt about it. So yeah, I mean, there's just a lot of action-packed going on right now. I hope you enjoy this information. That's pretty much what's up. This is my Twitter page at CompoundStock13. Growing it lots and talking to lots of people. So if you want to add me there, I tweet there pretty often. I don't know how much often I will end up making other videos, but you know, I'll try to do another video before I get back to where I live in northern BC, and you know, I may do a cell phone video even though I don't have my lav mic. So anyways, I hope this gives you a little bit of idea of the kind of momentum in the sectors and an understanding of how to just hedge your bets. There's also ideas such as like the Sqqq, which is the bearish side for the SPY, or there's ways such as the Uvxy to play those stocks, and then there's ideas such as like mRNA. I believe it's SDGR Schrodinger's, and there's other ones like, I guess, like CODX and maybe INO, but you know that INO doesn't have much cash, so I mean it's all can be kind of a big pump and dump in a sense, but companies like mRNA has a pretty good cash position, so I can see the backing behind mRNA having a bigger pump now. So anyways, I hope this is a clarity for you guys in the market. Just be careful out there, and again, if you're not sure of what's going on, just remember this thoughtful idea is cash is king, cash is king, cash is king, and that's just the reality of things. So I hope you enjoyed this session. Keep compounding your info, listen to my lingo, and Sqqq. Peace. If you haven't hit that like, I do appreciate it, and I'm out.